Me now to discuss the state of the IPO market, especially amid the government shutdown. We have Jim Neesen, managing partner and founding executive, Counter Group. Jim, it is good to see you again.
Yes, good morning.
Good morning. Always love to get your take because you have unique insight because of your work with bringing companies public. Let's talk about the impact of the shutdown on the IPO market, IPO activity.
Yeah, so for an IPO market, a government shutdown is kind of like pulling the plug on the scoreboard right in the middle of an exciting Super Bowl, right? The players on the field, they keep playing hard, but the confusion absolutely slows things down. And we're seeing that. In October, 70% of the deals that we expected to price are actually pricing.
What does this government shutdown mean for, kind of the pace? Does it mean that we'll have a slowdown and then things pick up back up at the beginning of next year?
Yeah, I think of it like a little power nap. The IPOs are taking a little power nap right now, but there is still so much pressure, both with VC and private equity, that want to get liquidity. It's kind of like that Lion King circle of life, right?
Yeah.
Over 1,000 unicorns are out there wanting to go out there and really price. Now, I think the other point out there too is that there are companies that you want to, it takes 6 to 12 months to get ready.
Right.
You want to get everything in order. So when the government shutdown will get resolved, right? I think the longest one ever was 35 days. On average, it's about 18 days. So this will, in my opinion, be a nothing burger, especially if it gets resolved in October. Then it's sort of game on, and the banks, as you noted, have a lot of incentives because there's companies that have been in the gym, working out with their revenue and their earnings. They're ready to go on the public markets. Last comment I'll make is that if you look at the vintage of IPOs this year, there's been 278 IPOs, right? As you mentioned, record since 2021. But there's a 27% return on those IPOs versus 13% in the S&P 500. So the banks are also seeing that there are there's a big appetite for risk on for these type of deals, and that's going to move into 26 as well.
What's been your advice to them who are like, okay, we've been patient because these companies are, older than in past cycles of going public, and they're ready, and they're like, we're ready to be out on the field. Coach put me in. What's your advice to them while they're still, kind of forced to the sidelines when they didn't anticipate being further forced to the sidelines?
Yeah, I think for a lot of companies, it actually can be a good thing because then you get more discipline practicing being a public company. I think most companies that go out don't get to do 1 to 2 quarters where you can do an earnings call and a script and actually pretend like you're giving guidance out to the street. We think of IPO as sort of like a marriage, right? Like there's the marriage, but the real life is thereafter. And so for a lot of companies, hey, let's really get prepared for the public markets out there, right? And
because, like a marriage,
because this is a long-term type of exercise. You want to be successful, right? You don't want to miss earnings.
Yes, the wedding day is great, but there is the marriage thereafter that you have to keep up.